What's crack-lackin', all my beautiful apes? Welcome back to the channel. Now, is the OCC's new approved rule change going to stop or slow down the Moass? This is a bit of a yes and no, a good and bad type of situation. So let's go over exactly what is being said in this approved rule change that has been getting a lot of buzz in the AMC community overall. So let's not waste any time getting into it. Tap, tickle, touch, or smash the like button for me if you want to help push this video out to as many people as possible, as well as let me know down below in the comment section what you make of all of this noise. If you think it's going to slow down or stop the Moass, obviously towards the end of this video, please do so, because I'm going to be giving you guys my opinion on all of this. And like I said, it's a bit of a good and bad situation, so I would love to hear your guys' opinion. I pretty much respond to every single comment as well. Now, from right here down, we're going to read this, only a couple of paragraphs, but it says, OCC proposes to revise several bylaw sections to transfer certain responsibilities currently belonging to the executive chairman to the CEO. OCC proposes to revise Article 4, Section 11 of the bylaws to assign to the CEO the responsibility of participating in the Securities Committee and panels thereof for purposes of contract adjustments. OCC also proposes similar changes, and I should say before actually getting into this bottom part that they're essentially taking this responsibility from the executive chairman to the CEO. So nothing too crazy there. They just want somebody, you know, in a higher up position to be able to make the decisions here. So that's what you guys need to know from that first paragraph. That's the first important thing to know. Doesn't really pertain to AMC or if they would slow down or stop the short squeeze. To the second thing you guys need to know. OCC also proposes similar changes to its bylaws concerning the fixing of underlying interest values of binary and range options, exercise settlement amounts of yield-based treasury options, exercise settlement amounts of cash-settled securities options other than OTC index options, exercise settlement amounts of cash-settled foreign currency options in circumstances where certain prices or values are determined to be unavailable or inaccurate for the contracts in question. Oh my God. Contracts in question, and the closing price for bound contracts. OCC believes that these responsibilities are best assigned to the CEO familiar with OCC's day-to-day operations rather than to a chairman who may or may not possess that familiarity. Now, what this is essentially saying, you see this cash, where does it say? This cash settled. So this essentially is just saying cash settled, cash collateral backed. That's all that is really telling you guys. Now, this other part is very important. This is what is getting really everybody all wild up. It says, OCC also proposes conforming changes to its rules concerning the following responsibilities, which would remain within executive chairman as well as the CEO and the chief operating officer, if one has been elected by the board. Rule 1104B concerning the authority to delay the immediate liquidation of a suspended clearing member's margin deposits and to use such deposits to borrow or otherwise obtain funds from third parties. That is what you guys need to know. I will go ahead and read this yet again. Rule 1104B concerning the authority to delay the immediate liquidation of a suspended clearing member's margin deposits and to use such deposits to borrow or otherwise obtain funds from third parties. So essentially, if a member of the OCC is losing out bad on their positions, you guys got to remember the Archegos situation, the over leveraging that is going on in the marketplace. This is essentially saying you cannot release that collateral, go significantly underwater, use that collateral to borrow from a third party. It is right here, clearing members margin deposits and to use such deposits to borrow or otherwise obtain funds from third parties. So you cannot take your margin, go and try to get loans, right? Go to the bank, wherever you're going to go and try to get more liquidity to use that capital to stay in your losing position to borrow from somebody else, because you'd put everybody in a bad situation. That is what essentially all of these rule changes have been coming down to, is really to limit risk. And that is what they are trying to do here. Like I just said, Rule 1104B. They are not saying that they would essentially not let them close out of a position. It is saying of a, to use these deposits to borrow or otherwise obtain funds from third parties. So they would essentially take control and prevent this from happening. Odds are this has been happening. But at the same time, this could also be seen as a good thing for AMC because they are acknowledging, one, the over leveraging that has been going on, and that the immediate risk that these OCC members do essentially give to the OCC, because if they default, it goes back to the Options Clearing Corporation, the OCC, essentially saying that they could go significantly underwater on some of their options trades. Now, there's also a silver lining here, and we will go over what that silver lining is right after we finish this paragraph. Rule 1106E, concerning the authority to determine not to close out a suspended clearing member's unsegregated long positions or short positions in bonds or options, or long or short positions in futures. So what is an unsegregated long position? So exactly what it sounds like. Segregated securities means any security held by the companies with respect to its customer's account. So an unsegregated security would essentially be not tied to a customer account or have other people's accounts tied to them. So I think that rules out a lot of potential positions, since we're talking about hedge funds and institutions that do have customers in their account. So that's something that you guys should probably know right there. But it is saying that they do have the option to essentially hold off and not close out of these positions, but they will still have to keep their margin in these positions, and likely, just logically speaking, your margin maintenance levels would go up. If there was no way that you could ever oblige for these options, they would get liquidated. They would not go into, let's say, a $10 billion losing options trade if you only had $2 billion worth of margin. Even if you delay that, odds are you're still going to be significantly underwater on your position. And all in all, I just think this is to mitigate risk a little bit more. It also does say Rule 1106F, concerning the authority to execute hedging transactions to reduce the risk associated with any collateral or positions not immediately liquidated or closed out, pursuant to Rules 1104B and 1006E. So they're essentially saying that they would be able to do some hedging for you, which all of this has been happening. This is really not any new news. The hedge funds institutions, they have been delaying closing out of their options positions for a long time. Every time we get a rally, they just instead short the stock. But what is the silver lining here? Even if I am totally misrepresenting this and they just don't want to, close out of any losing options trades, which I don't think is the case. I think I have a pretty clear understanding of what they're actually saying. The silver lining comes down to the short squeeze are shares. This has nothing to do with shares that are sold short. Over 20% of the free float, not even accounting for synthetic short positions as well as naked short positions. But options, they do help the short squeeze, they help the gamma squeeze. But like I said, this is probably only going to be for a small amount of accounts. And when it comes down to it, they're not going to go significantly underwater on their positions. And all in all, I think this really, even if this is legit and, I'm misrepresenting what this is and what this is saying, I don't think it will have a significant impact, or any impact, I should say, on the AMC, mother of all short squeezes. Once it starts, there is going to be no stopping it, no matter who wants to. And you're going to see fast liquidations because these accounts are going to go severely underwater. Now, this is my opinion on what is going on here. It's a bit of back and forth, a good and bad type situation. So let me know down below in the comment section what you guys think this really comes down to. I personally think that some people just, I shouldn't say in the ape community, but some people in general just want to spread fear in general. AMC is not something that you should doubt, in my personal opinion. No matter what rule change comes out, it's not going to affect the Moass. So tap, tickle, touch, or smash the like button if you guys got any useful insight or information out of this video, as well as consider subscribing to the channel for more videos like this. Also, check out the links linked down below in the description if you guys want to get access to all of my trades in real time, as well as some community members trades as well in stock, options, and crypto, whether they are day trades, swing trades, or long-term investments. Check out the link for the buy and sell alerts. Like I said, if you guys want to directly support the channel, the two links linked in the description as well, one for public, one for Weeble. That directly helps to support this channel. So with all that being said, guys, I hope you guys got some level of clarity and nothing to panic about. Just know nothing can stop the AMC mother of all short squeezes, unless a majority of apes just decided to sell out one day, and we have had many other points that would have happened, so nothing to be concerned about. I hope you guys enjoy the rest of your weekend, and I will see you in the next video.